This is your LMAX exchange technical update for Wednesday, March 1st, 2017. Euro dollar. So the euro has come back under pressure in recent trade, which puts the focus on a potential retest of last week's low at 104.94. A break and close below that level would be a significant development, as it would suggest the market is poised for bearish resumption for a retest of the 103.41 14-year low from January, below which exposes parity further down. At the same time, if the market is unable to establish a daily close below 104.94, it will leave alive the possibility of another bounce, with the market holding above that figure in favor of fresh upside back above key resistance at 106.80. A break above 106.80 would keep alive hopes for an inverse head and shoulders formation, a bullish formation that could open the door for significant upside. So although we have seen some setbacks in early Wednesday trade, there's nothing to talk about unless the market establishes below 105 on a close basis, and until then 105 below or 104.94 below and 106.80 above are the key levels to wait for clear directional insight. Sterling dollar. So cable is back under pressure over the past few sessions, and the market is now looking to establish below critical support at 23.47, the low that we saw back on the 7th of February. If the market breaks and establishes a daily close below 123.47, it could open the door for a resumption of declines, exposing a drop all the way back towards that plus 30-year low from October 2016 at 118.40. If on the other hand the market holds above 23.47, it will delay more immediate bearish prospects and keep this choppy trade, this choppy consolidation alive. Ultimately, it would take a break all the way back above 27.75, the December 2016 peak, to force a bullish shift in the structure. Dollar yen. So despite gains that we've seen early Wednesday in dollar yen, the market continues to be very well capped into rallies and should once again be capped into rallies in favor of potential downside below recent range support at 111.59 and towards 109.50 further down. Ultimately, it would take a break all the way back above 115.62 to force a shift in the structure and suggest the market is prepared for a bullish resumption. So again, even though we're seeing gains on early Wednesday up towards 114, the market should continue to be very well capped ahead of 115.62, ahead of a bearish resumption. Euro Swiss. So Euro Swiss remains under considerable pressure, and although the market hasn't really gone much lower over the past several days, the consolidation that we've seen is a bearish consolidation, suggesting an imminent break below the 2016 base at 106.24, exposing 105 further down. At this point, again, we would need to see a close back above 107.60 to alleviate immediate downside pressure. Aussie dollar. So Aussie continues to show signs of exhaustion in 2017 following the impressive run, taking us all the way up towards 78, which is some critical medium-term resistance. At this point, it looks like the market is poised to roll back over, and a close below 76 will strengthen this outlook and accelerate declines. Dollar CAD. So dollar CAD continues to show just how well supported it is, with the market recently holding above 130, that psychological barrier on a close basis, and looking to push back up towards some significant resistance at 136. At this point, a close back above 133.88, the high from the 20th of January, will strengthen the constructive outlook and accelerate gains, while any setbacks should continue to be very well supported ahead of 130. Kiwi dollar. So Kiwi continues to show signs of topping out, with the market now looking to break down for its next downside extension below the 71.30 area and towards the 70 psychological barrier further down. Ultimately, there's risk for deeper setbacks beyond, down towards next key medium-term support in the 68.60 area, going back to those lows that we saw in late December. At this point, only back above 73.76 would compromise or delay the immediate bearish outlook in Kiwi dollar. SPX 500. The S&P 500 continues with its record run. The market has seemingly put in record highs on almost a daily basis and is now focused on next key psychological barriers at 2,400 further up. At this point, at a very minimum, on a very short-term time frame, we need to see a close back below 2,350 to alleviate short-term topside pressure, though ultimately it would take a break back below 2,300 to force a more significant shift in the structure and a more meaningful correction in the S&P 500. Gold. So gold continues to retain a very constructive outlook, extending its recovery and strengthening the outlook for a longer-term base after being supported ahead of 1100 back in 2016. Any setbacks that we do see over the coming session should be very well supported, ideally above 1216, some previous support, in favor of the next major upside extension towards 1300. At this point, though, only back below 1180 would compromise the constructive outlook for the gold market.